Title: The Basics of Building Wealth, Understanding Income, Expenses, and Investments. Welcome, everyone. Today, we're diving into one of the most important topics for anyone looking to achieve financial success: the basics of building wealth. We'll break down what you need to know about income, managing expenses, and making smart investments. Whether you're just starting out on your financial journey or looking to refine your approach, this session will provide practical insights to help you build a solid foundation for wealth creation. Let's start by defining wealth. Wealth isn't just about how much money you make, it's about how much you keep, invest, and grow over time. To do this, you need to understand three key components: income, expenses, and investments. So, let's dive right in. First, let's talk about income. Income is the money you receive, and it typically comes in three forms: earned, passive, and portfolio income. 1. Earned income. Earned income is what most of us are familiar with. It's the money you make from your job or business. This is often the primary source of income for most people. Examples: salaries, wages, tips, and bonuses all fall under earned income. While earned income is crucial, it often has limitations. You trade time for money, and there are only so many hours in a day. To build wealth, you'll need to think beyond just your paycheck. 2. Passive income. Passive income is the money you earn with minimal effort. This could be from rental properties, royalties from a book, or income from a side business you've automated. Examples: rental income, earnings from a blog, or dividends from stocks. Passive income is powerful because it allows you to earn money without directly working for it. This can free up your time and is often a key strategy for building wealth. 3. Portfolio income. Portfolio income comes from investments such as stocks, bonds, and mutual funds. This type of income is generated from the growth or dividends of your investments. Examples: capital gains from selling stocks, interest from bonds. Portfolio income can compound over time, meaning your money makes money. This is a crucial element in wealth building. Understanding these different types of income helps you diversify your sources of revenue, which is essential for financial stability and growth. Now that we've covered income, let's talk about expenses, an equally important part of the wealth building equation. Managing your expenses effectively is crucial because it determines how much of your income you can save and invest. 1. Fixed versus variable expenses. Expenses can be divided into two categories: fixed and variable. Fixed expenses, these are your regular, recurring costs like rent, mortgage payments, insurance, and utilities. Variable expenses, these can change month to month, such as groceries, entertainment, and dining out. Identifying and categorizing your expenses helps you understand where your money is going and where you can potentially cut back. 2. Budgeting basics. Creating a budget is a fundamental step in managing your expenses. A budget helps you allocate your income towards necessities, savings, and discretionary spending. Steps to create a budget: start by tracking all your income and expenses for a month. Categorize your expenses into fixed and variable. Set spending limits based on your income and prioritize essential expenses. Example: if you're earning $1,000 a month, you might allocate $2,000 for fixed expenses, $1,000 for variable expenses, and aim to save or invest the remaining $1,000. 3. The importance of saving. Saving should be a priority in your budget. Even small amounts can add up over time, especially if invested wisely. Aim to save at least 20% of your income. This might seem challenging, but by cutting back on non-essential expenses, you can make it work. Remember, it's not just about how much you make, but how much you keep and wisely manage. Reducing unnecessary expenses increases your capacity to save and invest. Finally, let's talk about investments, the engine that drives wealth building. Investing is how you make your money work for you, growing it over time. 1. Why invest? Investing allows your money to grow faster than if it were just sitting in a savings account. Over time, compound interest and investment returns can significantly increase your wealth. Example, if you invest $1,000 at an 8% annual return, after 10 years, that money would grow to nearly $2,159, not just from your initial investment, but from the earnings on those earnings. 2. Types of investments. Stocks. Owning stocks means owning a piece of a company. Stocks have high growth potential, but they can also be volatile. Bonds are loans you give to governments or corporations, which they pay back with interest. Bonds are generally safer than stocks but offer lower returns. Real estate investing in property can generate rental income and long-term appreciation. Real estate requires more capital and management but can be very rewarding. Mutual funds and ETFs. These are collections of stocks or bonds that you can buy into, which provide diversification and professional management. 3. Risk and diversification. All investments come with some level of risk. Diversification, spreading your money across different types of investments, helps reduce this risk. Key point: never put all your eggs in one basket. Diversifying your investments can help protect your wealth from market volatility. 4. Starting with small investments. You don't need a lot of money to start investing. There are platforms today that allow you to start with as little as $10. Example, consider starting with index funds or ETFs, which are less risky and provide exposure to a broad market segment. Investing wisely is essential for building wealth over time. It's not about getting rich quick, but about steady, consistent growth. Let's recap what we've covered today. We've talked about the 3 types of income: earned, passive, and portfolio. We discussed how managing your expenses through budgeting is key to maximizing savings. Finally, we explored the basics of investing and how it's essential to grow your wealth over time. Building wealth doesn't happen overnight. It requires understanding your income, being disciplined with your expenses, and making informed investments. By applying these principles, you'll be well on your way to achieving financial success. Thank you for joining me today. I hope you found this session valuable and that you're ready to take the next steps in your financial journey. Remember, the most important thing is to start no matter where you are. It's never too late to begin building wealth. See you next time.